One of the biggest questions that both Tesla bulls and bears are asking is what is happening with Tesla's delivery targets for 2024 and beyond? How likely is it for Tesla to hit their stated goal of 1.8 million cars in 2023? And what about next year? So today we're going to watch a video clip from Tony Sacconaghi, an analyst for Bernstein, who's very bearish and believes Tesla might only grow just 10% next year. Yep, that's just 10%. But no worries, we're going to balance that out by showing a statement by Martin Viecha, Investor Relations for Tesla, who clarified that there are two major growth waves to expect. So today we've got Brian White joining us. He's a host of his YouTube channel called MyTeslaWeekend, an incredible expert in terms of figuring out and forecasting Tesla's delivery numbers, and that's why I wanted to ask him this question. Welcome, Brian.
Good morning. You know, it's pretty crazy watching the spin these days, but fortunately we have already done the numbers ourselves to have a better picture.
Yeah. Well, there's two stories here. So the first one is Tony Sacconaghi, and this is his opinion. So we're going to reply that to him. And the second one is there was a misunderstanding between what Deutsche Bank heard directly from talking to Martin Viecha and then him explaining it. So let's watch this video for about Tony and see what he says.
More on Tesla. Tony Sacconaghi, Bernstein Senior Research Analyst. Tony, great to have you with us. You're basically the opposite of Kathy Wood. You've got an underperform rating, a $150 price target. And I think that was interesting when I read through your notes is that, you know, you have all these estimates. You think full year 24 estimates on the street are too high, but it almost doesn't matter because if you take a look at how Tesla has reported and how they have missed estimates in terms of deliveries for a number of quarters, they've missed on some of the metrics for the quarters. The stock is still up 80% this year. So how do you look at this stock right now and say it's 150 when it's divorced a little bit from these estimates and the expectations on the street?
Sure. Good morning, Melissa. Yes, I mean, I think in the near term, Tesla stock has been extremely difficult to call. As you note, I think earnings estimates for this year have gone from $6 to $3, and yet the stock is almost double from the beginning of the year, albeit still down considerably from, last September, October levels. And so I think that's very challenging for investors when numbers are generally coming down and the stock is holding in there or actually gaining ground. I think a lot of it is because there's continued belief in the longer term vision of Elon Musk and Tesla. I think you showed the clip of Kathy Wood saying she really believes in autonomy. Others have espoused the fact that Tesla will have dominant market share 10, 15 years from now, 10, 20 million cars. And so I think while that hope is still possible and is still alive, it's difficult for the stock to go down. I think the big question for me is next year, do they have to cut their growth targets? Might they only grow at 10%? And I think it's certainly possible in 24 and 25 that Tesla could have pretty modest unit growth because they're not going to have new models and they're struggling to grow now without doing major price cuts.
I want to talk to you about China, since that's supposed to be a major engine for the Tesla story in the future. Li Auto, a competitor there, has been gaining market share. Granted, it's only 4.5% according to its latest earnings report, but that's up from 1.5% a year ago. Tesla has been losing a little bit of share. HSBC, in its initiation last week with the sell rating, pointed out that the EU might be looking into probes. And so that could impact, it exports 40% of the cars made in Shanghai right now. How do you take a look at the China story? And is there, if it was worth X amount in its share price, 8 months ago or a year ago, what is it worth today? Is there a discount associated with that?
I think, the Chinese EV market is incredibly competitive. It's, 1 out of every 3 cars sold in China this year are EVs. There is an 800-pound gorilla, BYD in China, who is growing much faster than Tesla. They just reported 25% automotive gross margins. Tesla's at 17. They only make EV-related cars. And, there are others like Li and Xpeng who are formidable competitors as well. And so the Chinese market, which is the largest car market in the world, is the most competitive market. It has the most models, it has the most competition, and Tesla has its lowest share there of any region. Its share in China of the EV market is about 10%. Its share of the EV market in the US is about 70%. And I think over time, markets will become more competitive. The European market will become more competitive, is becoming more competitive, as the Europeans have come out with pretty good EVs and the Chinese are moving in. And I think over time, the US market will become more competitive. And that's the challenge for Tesla, is it's playing in a hyper competitive marketplace. And it's really, really difficult for one player to have outsized share or profitability. And that's ultimately our concern about Tesla longer term, is that it is really a car company, and the car industry makes it difficult for anyone to have outsized margins or share over the long term.
Okay, man.
All right.
Okay. So I came here to get brighter, and I'm not going to lie, I feel dumber. Tony is off his rocker. So Li Auto's coming for you. That's 40,000 units is what they did last month. That's quite good. The host saying, well, there's probes. This could really play into it. Tesla was specifically excluded from the probe to such a degree that they have filed to be included in the probe. They want to be part of this investigation because they are the largest EV exporter from China. They in China, the biggest car market, they've only got a 10% share. That's EV share, right? Yeah. You're comparing it with $5,000 econo boxes that are not the future and will not be on the road in 5 years. And it's a hyper competitive market. Yeah, that's the auto industry. We just call that the auto industry. It's already a hyper competitive market. This is, oh my gosh, just so ridiculous.
Thank you, Brian. I needed you to say this. They continue to compare EV sales percentage of EV market share instead of the growth of Tesla, because EVs is taking over ICE cars. Tell me what you think about his prediction of 10% growth before I share what Martin Viecha from Tesla said.
Sure. So I will get to that because that's a bigger topic. But last thing on that is he's saying, well, they've only got a 10% market share and EVs are 30%. So 10% of 30%. It's 10% of all. It's come on, man. So what do I think of the growth story for next year? So we're looking factory by factory, model by model. We know the Cybertruck is going to be ramping. The ramp is expected to be slow. I have talked with Bob from Bob's Bibs and Bobs, the guy who sells parts for Cybertrucks, and he has told me that Tesla has tentatively put out expectations for suppliers for 89,000 units. Heard it here first. 89,000 is the expectation. It could be higher, it could be lower, but that's the guidance that suppliers have been told. That's not going to contribute a meaningful impact against 2 million. That is only about 5% growth right there, but that is 5%. We've already got 5% before we think of anything else. We know the Refresh 3 comes off the line quicker. We know they're going to be doing that as well in Fremont. We know there's pent-up demand for Refresh 3. That's to suggest that alone wouldn't get us another 5% is unlikely. And then they say, they can't drive growth without more price cuts. They have the margin, they have the economies of scale, they have the efficiencies in place. Why couldn't they do another price cut? So 10% to me would be kind of the floor, but I think it would be higher than that.
Well, beautiful. Wonderful answers. I've learned a lot from you just now. You're right. I mean, it's just not, it's ridiculous that he didn't even say that they could do more price cuts if they needed to, if this is like the worst case scenario. But I mean, Model Y, Model 3, even though you don't introduce new models in the next couple of years, even though let's say the compact car takes a couple of years, Cybertruck is slow to launch, Model 3, Model Y is nowhere near hitting a max. Now, he thinks it is because they had to cut prices. That's because of the macro. So if macro continues to get worse, like worse from where it is now, maybe he's right. Maybe that'll taper down. But if macro gets better, why wouldn't more Model 3s and Model Ys sell? And then, like you say, they can even continue to cut prices because as the years go on, the margins get better. So let me share this next story. I think it's quite interesting. So this is a note from Deutsche Bank actually met with Martin Viecha. And look at the top here. It says, Tesla admits being in a low growth period, according to Deutsche Bank. So let's walk us through that. So Deutsche Bank hosted Tesla's head of investor relations, Martin Viecha, at the Auto Tech conference. And this is what Emmanuel Rosner said, the analyst for Deutsche Bank. Tesla candidly admitted the company's now in an intermediate low growth period, coming after the very strong growth of Model 3 vehicles seen in the past 5 years. That's what Rosner just said. And so some of the analysts are reacting to this, going, Tesla themselves has admitted that they're in a low growth period. And then they just continue to say just things that are still what guidance that Tesla is saying. Amid the macro and demand uncertainties and a second wave of EV adoption, they're going to look to expand output at the Austin and Berlin plants very gradually, continues to review pricing weekly. Delivery target remains at 1.8 million units. And Tesla will do what it takes to reach it over the remainder fourth quarter. While they're not willing to discuss timing of next gen vehicle, it indicated that the internal timelines remain unchanged and on track, and that this $20,000 cost of goods platform remains its highest hardware priority. So everything's still the same, right? So like they're still saying we're going to hit our 1.8 million units this year. We're still saying that we're not saying anything's it remains unchanged for the Model 2, and yet they react to that. So we're seeing these analysts, including Gary Black, now say, hey, Tesla bulls, you should reduce your expectations. Tesla volumes can grow, that Tesla will still hit the 50% per year. To hit 50% per year, right, don't they need to hit at least 1.6 something this year, which they will, if they hit the 1.8, they're going to be just fine. The question is, can they hit 2.3, 2.4 next year to hit the 50%? Gary says, I'm at 37% volume growth in 2023 and 37% growth in 2024. And Wall Street's at 37%. Okay. But then he reiterates and says, apparently Martin Viecha, head of Tesla Investor Relations, recently advised investors is now in an intermediate low growth period, according to a Deutsche Bank Auto conference. So what happened was Martin Viecha replied to Gary. And he said, what I said specifically is that we're between two major growth waves. The first is driven by 3-in-Y platform, and the next one will be driven by the next gen vehicle. So it's a very positive comment saying that we have massive growth waves. We just had a big one, 3-in-Y, and we're going to have even a bigger one with the next gen vehicle. And then the interpretation by the analysts is that we're in an intermediate low growth wave. What's your thoughts?
Well, I think we're saying the same thing in different language. But the difference is the tone. What Gary and the analysts are saying is lower your expectations, and what Martin is saying is the long-term vision remains intact. We know when the compact comes out, it is going to boom. If you look at historic constraints on production, things like batteries may not apply. This could be done with lithium iron phosphate batteries, which would be very readily produced by suppliers. The design is simplified to allow amazing ramping speed. And if you look at virtually every product since the Model 3, the ramp speed has been fantastic. The ramp speed is great in Texas. It's great in Berlin. And if you look at those and say, well, yes, but production is still low, it is, but they're underutilizing their capacity. If demand tripled for the Model Y, which lowering rates could do, lowering prices could do, those factories can dramatically expand production without a significant delay. 3 to 6 months, they could get additional lines up and running. And earlier you said, well, maybe they won't have to cut prices. If the margin is there, they will choose to cut prices, even if they don't necessarily need to, if they've got the ability to produce more vehicles. So any improvement to the macro could itself provide a 10% benefit. There are countries like the UK where, since Brexit, new auto sales are down. They had historically always been around 2 million. Now they're around 1.6 million. A small benefit in terms of the macro economy could give Tesla a stronger foothold in that market. And there are other markets where rates are similarly problematic.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com. Brian, what's your estimate for 2023? How many cars will Tesla sell? And in 2024?
Okay. For 2023, well, we're going to hit right around 1.8. It's going to be real close. For 2024, I haven't updated my numbers recently enough, but it's going to be more than 10% growth for sure, because 10%. I mean, we're talking the Cybertruck alone is 5%, and then any other growth on any other car, I'm looking at more like 15, 20%, which would get us to almost that 50% rate based on the, 2020 targets that were stated. And then into 2025, we'll get to actually see some real Cybertruck numbers. That alone could make a 50% for 2025. We just have to wait and see what pricing finally wiggles out to be. And when I mean pricing, I don't mean at the release. I mean 6 months after, 12 months after, when the rabid demand has died down, when the production costs are better understood, when the line is better amortized, and the economies of scale on parts has been realized. I think it's going to be a real game changer, and I think they're going to sell like hotcakes.
Yeah, perfect. This is exactly the show I needed you on. Thank you so much for just amazing information. I appreciate that. The evaluation. Follow Brian at YouTube. He's got his own channel called MyTeslaWeekend, and he does incredible deep dives. Thanks, Brian. Thanks.